All right, welcome back. We got our weekly stock market update, and we've got a red week this week for a lot of technology stocks. You're seeing a rebound here in some of the other names in the market, like financials and healthcare. So we're getting a little bit of a rotation, but this week was a pretty volatile week, and there's a lot of AI doomerism popping up out there in the market, a lot of negative sentiment these last couple of days. But when we look at the charts, we've been on a rip for the second half of the year. So we get a little pullback, and it seems like Armageddon all of a sudden. So to me, I'm not too worried about this little bit of red that we have, but it is concerning because we are at all-time highs. Everyone was bulled up for the last couple of months, and now we're starting to get some negativity. And so people are wondering, when's the floor going to fall out from underneath us? I don't think that's the case. There's still a lot to be constructive in the market, and we'll take a look at some of that later on in the video. But some of the big losers this week, you had Nvidia down 9%, Microsoft down 6%, Google was down 2%, Meta and Oracle almost down 8%, Palantir down 11%. Palantir had phenomenal earnings, but again, the stock was ripping to an all-time high. So to give back some of that is not out of the ordinary because it just moves so much going into earnings. People are going to take profits eventually. Tesla down 4%. Elon Musk did get his pay package approved, so that is good for Tesla shareholders. And you've got Eli Lilly up 10%, Berkshire Hathaway up 5%, Amazon down 2.5%, United Healthcare down 6% this week. And when we look at the overall market, you've got the NASDAQ is down almost 4%. So a big drop this week for the NASDAQ, 4% drop. You've got the S&P down 2%. And the bond market was pretty much flat. Gold was pretty flat. And the crypto market did take another hit this week. So Ethereum down 12%, Bitcoin almost down 7%, and Solana down 15, almost 16%. And let's take a look at the S&P and the NASDAQ here, because we did rally a little bit Friday afternoon. Things were looking pretty ugly Friday morning. Let's zoom out here. So I believe last time we talked about how we had just these multiple gap ups. So we had this huge run here. We really just gave back that rally that was getting a little crazy. We've been consolidating here for a little bit, and then we had a crazy rip, like 4 days in a row of just gap up, gap up, gap up, and now we gave back those gains. So we'll see what happens next week. But yeah, as you can see here, Friday afternoon, we did a good job of kind of getting back to this level here that we originally broke out of. So in reality, we haven't really gone anywhere in about a week and a half. But sentiment does feel very, very bad. And a lot of that is because you're seeing a lot of kind of crappy stocks really get taken out to the woodshed. And the AI bubble is, the AI sector is starting to get questioned if we are in a bubble or not. So that's the S&P. NASDAQ's going to look pretty similar here, just a little bit more volatile. Again, we broke out of this range where we are now. We ripped out of it, and then we gave those gains back, dipped under, and now we're right back where we were about a week and a half ago. Long term, the trend is still your friend here. So again, when you zoom out, it really kind of reiterates what I talked about. We had these few days where we just were kind of irrationally gapping up on China news, earnings, things like that, and then we've just given all that back. So a little bit of exuberance here, and now we're coming back to reality, but we're back where we've been hovering for a while. So we'll see if this was the market exhausting itself, and then if we have a deeper correction, or if we just go ahead and get that euphoria back and keep chugging along. But again, this trend looks really, really good long term. We're still in a long-term uptrend. I'm not too worried about a 4% pullback after we had a 4% ripper. So we're just back to neutral. All right, so let's take a look at gold sitting at $4,000. Just again, kind of looks like the market got a little ahead of itself, giving some of that back, and then finding some support here at around that $4,000 level. Oil not doing anything, chopping along. Bitcoin, so short term feels very painful as we're around that $100,000 level, but again, when we zoom out, the trend still looks pretty solid here. So it has been a quick drop from 115 down to 100K, and super important level, this $100,000 level. I think if we fail that, that's when I'm really going to get concerned and really start to be worried if we do not hold above 90K. But long term, not worried at all about Bitcoin. Now Ethereum, this did drop below that $4,000 level, and once we broke that, it got real ugly really fast. So we need to get back up to that $4,000 level and then reclaim that to be really constructive here, especially on all other altcoins. And if we can get above that $4,000 level, I think we'll quickly see a move up to the $6,000 level eventually, if we can reclaim that. If not, a lot of space down here for Ethereum to kind of pull back. Hopefully we don't see it in the 2,000, but you never know. So I would expect a little bit of a relief rally in the next couple of weeks for crypto, and that's where it's going to be really important for Bitcoin and Ethereum if they can get above these supports that have been turned into now resistance. So we'll see what happens there. The bond market, not doing a whole lot. We are creeping back up ever since the recent interest rate cut, but we're still in this downtrend here. So again, rates are moving up in the short term, but in the long term, the trend is our friend, just like all the other charts we've talked about. So I do continue to see interest rates dropping down, like we've stated for a long time here. We finally broke out of this range, and I do see a path for us to get down under 3.5 on the 10-year yield. Just a matter of how quick that'll happen. Again, a lot of negativity in the market about jobs and the consumer. We aren't getting clear data, and even when the government was open, that data was questionable anyways. So once we get some more data eventually when the government opens, I think that'll just give some more clarity. And because right now a lot of people are speculating, oh, the jobs numbers are going to be really bad when they open up, consumers in the toilet, yada yada yada. And so we don't have clear data. So once we get that data, I think people will be put to ease. Whether it's good or bad, it's how bad is it or how good is it. And then once we get that information, we'll see. But if the jobs numbers are very bad, you'll see rates plummet, and there'll be more fears of recession. So you'll see stocks sell off and the bond market start to rally. So we'll see interest rates drop, and I think that's when we'll get a meaningful push below 3.8. And then we're also going to have the Federal Reserve have the green light to cut interest rates even faster if there is a weaker job market. So let's take a look at some individual names here. NVIDIA. So again, all these charts are kind of looking the same. We have this exuberant push up, and we just give it all back. So the question is, was that it? Was this the blow off top and then we just make a huge drawdown? That's what I think people are calling for. I think it's much more likely that we had a little bit got ahead of our skis, we sell off, and then people come in and buy the dip. That is the camp that I'm in. So we'll see for NVIDIA. Again, long-term trend, this chart looks great. And this company is operating at a high clip. Wouldn't surprise me if we consolidate here between the 180, 190, we get earnings, and then we're back to all-time highs. A perfect example is going to be Amazon. Amazon has just been chopping along. Sentiment was getting pretty negative. People were worried about the cloud. They were worried about the consumer. They're worried about AI. They're worried about 1,000 things. And then they forget that Amazon is a phenomenal business that makes a ton of money. And the chart goes nowhere. No one's buying Amazon. Right before earnings, it starts to sell off. Numbers come out. Oh, the numbers are great. Stock gaps up 15%, all-time high. So we are seeing some profit taking on Amazon. Probably will fill this gap here, get down to 230, maybe drops a little bit below that, and then resumes its way back up. So that's kind of my case again for a lot of these names. Let's take a quick look at Uber. Uber had phenomenal earnings, but it is selling off after earnings. But again, it seems like an aggressive sell-off from 102 down to 91. But we zoom out, it's been here chopping, consolidating, while the fundamentals, the earnings continue to improve. Let's see, 13.5 billion in revenue, very solid. Okay, what else here? Google did come out with a partnership with Apple, and they're going to be working on the new Siri for the iPhones and all the Apple products, so that's good to see. This thing is barely selling off, so holding up very strong. Let's take a look at, we'll look at Apple in a minute, but let's take a look at Tesla after the shareholder meeting. A little bit of a sell the news. We all knew that the likelihood of that pay package being approved was pretty high. Again, I'm in the camp that Tesla consolidates here. Q1 numbers come out, kind of sells off, chops along. Second half of the year, we get some positive news on full self-driving, Optimus, whatever, and then we make another move back up. I don't expect us to just blast through 500 anytime soon because we've had a pretty nice run up here. The market needs to consolidate and wait for some more tangible news to come in. There's been a lot of good news, a lot of good developments for Tesla besides the tax credit ending. So we need to kind of see good car sales for this first half of next year, I believe, for this stock to keep moving. But Tesla trades on a lot of hype and narrative, so if there's more hype and more solid narrative, this thing could easily blast off again. But I feel like we've gotten a lot of that recently, and that's been a big push for this recent move that we got here. So we'll just consolidate, probably people take profits and move on to the next shiny toy in the market, because Tesla's been a nice trading stock for these last few months. So it wouldn't surprise me if people kind of drop this toy and go find another one, but the long-term holders are going to keep this thing up. But wouldn't surprise me if we get a little consolidation, a little sell-off before the second half of next year. Let's see, any other names to talk about here? Costco just hanging out around this 920 level. Again, waiting to be a little bit more aggressive if we can get a quick drop under 900 bucks. When are their earnings coming up? December 11th, so we got a few more. We got about a month to go before their earnings. Oracle's an interesting name. We had this huge, again, exuberance here, huge gap up after earnings. We've now filled this gap after the earnings, and again, this is another stock that I expect to start to resume back to the upside. It just got over its skis. It got up to 320 bucks after their earnings and their AI announcements, and there's a lot of people that have been holding from 100 bucks, 120 bucks, 150 bucks, and then a few months later they get the opportunity to sell for a 2x or a 3x after a 40% gap on earnings. People are going to take some profits. This is going to fill the gap, but nothing's changed with the company. They still have those deals coming in. They still have a large increase of revenue coming down the pipe. And so now we're going to see people, how enticed are they to buy at 230 versus 350, and then can that be enough to push the stock back up? So got a little expensive here. The sellers were more powerful than the buyers, but now when we get a, what is this, a 20-30% drop? Yeah, once we get a 30% drop, does that entice the buyers? Is that enough to entice the buyers to start buying and to keep the sellers from continuing to trim positions to make the stock go back up? So that is to be determined, but it did feel like we got a lot of bad news this week, and we'll see if there's more bad news to come. Palantir. So we've seen this 2 earnings in a row where, again, we get an exuberant move to the upside, and then the profit takers come in, it'll consolidate, the buyers step in, push the stock back up. We get an exuberant move into earnings, sell off. We'll probably consolidate around this 170 level. We've been touching this 170 level pre-earnings, so this just looks like a trader's manipulation here. Let's see if we can zoom in a little bit because you can see it better. Consolidate sideways. We have an event coming up, so people buy up the stock, they take profits, sell it off, and then we'll consolidate here until the next catalyst either moves us up or down below this trend. But Palantir is still a phenomenal business. It is expensive, but it is a phenomenal AI business. Probably the best AI software company out there, but it is not cheap, but you get what you pay for. All right, let's take a look at Apple, Meta, and then we'll get out of here. Apple holding up very, very well. This is one of the only companies that has not invested in AI. So when you get the AI bubble fears, it doesn't really affect Apple because they haven't spent a ton of money on these data centers and CapEx. They haven't benefited from AI, but it also isn't going to be something to come bite them in the butt down the road. If it is a bubble, I think the chances of it being a bubble are highly unlikely. When you hear people say bubble, the definition of a bubble is something that does not realize the potential that it is being made out to be. I don't think that'll be the case. I think our timeline could be incorrect. So if people are expecting AI robots in their house tomorrow and unlimited productivity and unlimited goods and services tomorrow, I don't think that's going to be the case. I think AI could take a lot longer than what we realize to really fulfill the expectations of people, and that could make the financial bubble of AI pop. But I think the technology of AI is not going to be a bubble. It just, the timeline could be a little longer out than what we expect. So we'll have to wait and see. Meta still getting hammered here. So it did drop down to 601. So pretty interesting here for Meta. Again, aggressive drop down, but when you zoom out, very nice looking trend. And this to me looks like one of those charts 6 months from now, we're all going to look back just like right here and say, why didn't I buy Meta at $4.99? It's now $7.90. Would not surprise me one bit if we look back a few months from now and say, why didn't I buy Meta at $6.20 and it's now $800? Who knows? Maybe we drop further from here, but this company's not going anywhere, and they still have revenues of $51 billion per quarter. So pretty phenomenal there. So I am looking at Meta. This week I kind of got distracted because so much was going on. But definitely, if the market looks like it's going to continue to the upside, I could see this thing quickly getting back up to 680 and above. And we're actually going to put a box here to see when does Meta go to fill that earnings gap. We'll have to wait and see. There is also a gap down here from an earnings back in May. So maybe it wants to go down there first before it goes up to the $700 gap. But I think that's about it. Don't want to talk about Microsoft, not a whole lot to talk about. So that's it. All right. Well, we will talk next week. Have a great weekend, everybody. Peace out.